was a slightly disappointing number. I think, as I mentioned before, the print, we were like looking for something closer to 1 million. But as Jason and others have pointed out, we're talking about a second derivative that's looking a little bit negative. We know that the pace of recovery in the labor market was going to slow in the fall after the snapback we had following the total shutdown in the beginning part of this year. But the big thing that I'm worried about in terms of the labor market is whether or not companies are making decisions today about their labor force given the last 6 months of experience in the pandemic. And by that, I mean, they're kind of asking themselves, do we need as many people? Should we be cutting people because we have less visibility into the future of economic activity? And what does this do overall to their margins? And then what does it do to the consumer and consumption? So that's what I'm saying. I think the 2021 question is the really big one. Overall, I would say, the slowdown here in terms of retail hiring and transport, places where we did see a big snapback in the last couple of months, is not terribly surprising. But I think that, the balance of the fourth quarter is going to be tough to really, regain momentum against a sort of slowing economy, a slowing recovery and, higher incidence of COVID.
Hey, Jason, this is weird. This is weird. You know what the number of what unemployment rate was and the last jobs number before the 2012 election? It was 7.9. That's weird, isn't it? That's something people don't. Go ahead.
I remembered it rounded to 8. I didn't remember the first decimal. This is definitely, relative to the expectations, disappointing. It's not just that the headline number came in below what we thought. If you look, the number of people on temporary layoff in the month of September fell by 1.5 million. So you had people brought back to their job, but then the number of people who are unemployed for reasons other than temporary layoff actually went up in the month of September. So in some underlying sense, the labor market is now in a more challenging place for recovery. Another thing, that participation rate falling is really surprising when unemployment insurance benefits, the extra $600 a week, expired at the end of July. So we're now 2 months in to people getting only 50% of their wages instead of what they were getting before, 150%. That was supposed to cause a labor supply increase. You're not seeing any large labor supply effect of that in the data. So, while I think Jason, we should go from 600 to 400, yeah.
Jason, just real quick, I do want to point out that last month you had this huge surge in the labor force that people thought was a little bit beyond the pale, up 968,000. Right. Now you had a fall off at 695,000. I would think, as we know, as you know, probably more than anybody on this panel, the household survey is very, very volatile. So I would take those two together. I think overall, people are indeed in a modest way, not rushing into the workforce, but coming into the workforce. I wouldn't take that September number at face value. I would average it with the big influx of workers in August.
I agree with that, Steve. But if you look, the labor force participation rate is now exactly the same. It was 61.4 in July. That's what it was in September. So you saw no increase from July to September. And normally, by the way, as the unemployment rate falls, you would expect the labor force participation rate to rise, even taking away, not counting the expiration of unemployment. So we would have thought the labor force participation rate would rise. The fact that it didn't is very surprising.
Shepard Smith here. Thanks for watching CNBC on YouTube.